Welcome, traders, to another Tick Mail trading update with me, Patrick Munnelly. Want to update the S&P 500 view using the emini futures contract and identify some action areas, high probability action areas for the trading week ahead, along with some realistic price objectives for this week. So, before we jump into the technical setup in terms of the macro drivers, it's a quiet-ish week. Heading into Wednesday, we are going to be focused on CPI in the States, looking for a year-over-year 3.3 with a month-over-month 0.3%. Now, if that comes in hotter than expected, expect that to potentially be a catalyst for some weakness in the equity side of things. And then heading into Thursday, we get the PPI. PPI forecasts 3.2% year over year, 0.2% month over month for core. And again, if that comes in hotter than expected, that's going to cause a bit of a repricing in terms of Fed funds futures for the FOMC meeting or the FOMC decision on the 18th, which is pretty much going to round out the year in terms of macro events for these markets. We also have in the background, in terms of the narratives and dynamics for this week, we are seeing Trump get a little bit more verbal in terms of both his social media and speaking to the press now. So keep an eye on the wires for any potential tape bombs from him. And we also have the ECB rate decision on Thursday, where they're expected to cut. And we also are expected to hear from Chinese authorities with respect to stimulus measures. Already this morning, we have heard from the Politburo, the most powerful set of politicians within the country, a group of about 24 there, who have issued statements with respect to stimulus that is coming as we head into next year, and that has put a bid under the Chinese markets and also into things like gold and the Aussie dollar, which is often used as a proxy for the Chinese market. So those are some factors to bear in mind from the technical side of things. On the weekly time frame, versus that 51.24 swing low. Sorry, 51.20 is the low there. Let's just adjust this. 51.20. We are looking for a 5 equals 1 on the weekly time scale at 62.50, just above there, 62.51. That's the weekly objective. In terms of the 5-period volume weighted average price, that's coming in now in around the 6,000 levels, so quite a way below current price, and that's going to take a decent weekly swing to get a close below there and flip momentum bearish on the weekly timescale. Do note we do have significant bearish momentum divergence still in play. However, we wait for price to confirm, but something to factor in. Moving to the daily time frame and looking at the implied volatility for the week ahead, we're looking at a move. Well, the options market is pricing a move this week of plus or minus 62 points from the open last night. So that gives us projected range targets on the top side into 61.58 and on the downside 59.93. So I use those as targets and then also potential resistance or support entry levels depending upon the price action and the setup. Certainly this week I'd be using these areas as entries on both the short side and the long side, and we'll cover off in a bit more detail now as we look at the plan for the week ahead in terms of the 4-hour charts. So as we go into the week, I'm using a weekly bull bear zone of 6,072. 6,060. So any pullbacks into that area, I'm watching for bullish reversal patterns to engage on the long side. Targets initially are going to be daily projected range resistance that comes in at 61.36 today. And then we're going to look for a test of that 61.50 area. And if we get that 61.50, 61.60 heading into the CPI and we see some weakness, that could be the area where we look for a more sustained pullback back into test the projected ascending trend channel support into that 60, 70 area. And then from there, we look to set a base, certainly heading into next week. If we look at the seasonal patterns just quickly, worth noting that over the past 25 US election cycles, we've tended to make a low into the midpoint of December and then trade higher up into the end of the year, obviously, broadly in line with the Santa Claus rally theme, but slightly nuanced in terms of the election aspect to that. So the ultimate target, like I say, is going to be these 6250s, and it's really going to be looking for the entry points on the long side. But I am willing to play the short side on tests into this daily projected range resistance, the 6130s and the 6150s, looking for pullbacks into test the weekly bull bear zone to act as support for an extension then to the upside through next week into those 6250s, which are our ultimate upside objective for now. Any loss of the weekly bull bear zone back through that 60-50 level, we will be looking at 60-30, 60-20. That coincides with projected ascending trend line support, this internal trend line, which forms the lower boundary of the wedge pattern we're trading in. And so any move into that area, again, watching for bullish reversal patterns there as an opportunity to engage on the long side with the same upside objectives in mind. Just conscious or cognizant, I should say, of the fact that we can see some volatility now as we head into the CPI, PPI that can set up the pullback before we get the opportunity to engage on the long side for that run up into those 6250s into a potential year-end upside extension. At this stage, it would take a loss of the 6,000 level, 59.90, to suggest a more meaningful high in place, and then we'd be looking to move down into the 5,900 level. Certainly possible at this stage, less probable given the current seasonal and structural setup. As always, traders, plan the trade the plan, and most importantly, manage your risk. Until next time, thanks very much.